Hey folks,
Very
we
sure
are
you're looking out for
into
that Nordisk Bank press
Thursday,
conference.
the 22nd of September here, 2022. So FOMC last night, 75 basis points as expected out of the FOMC, bringing us to 3.25 on the interest rate. So hawkish stuff from the Fed and from Jerome and the boys and girls on the FOMC. And what we got down was a significant push to the
About one
lows on
column of
equities. So
headline
we just did a
inflation, that's up
sectoral overview
1.9% year on year,
here in the
underlying up
room.
1.8.
And really interesting to have a look over what all these constituent sectors in the S&P are doing at the moment. And they all look cheap and look set to be getting cheaper. So let's just get rid of the DAX here this morning. Looking at that there on the NASDAQ, 11,583s and a half. Nice little target for us on the shorts. Picking up at socks though this morning and pulling back. I think, back on trend around the R1 is a target for this dip buying activity that we're seeing at the moment. On the S&P, the big one, we're looking at essentially a breach on the trend we were looking at yesterday. Coming in here 38.29. So just below there, dip bar is bringing us back up to that level for the moment. But there's a lot of headwinds for this market. Should it pull back on the trend at the R1, I just think, yeah, fine, buy the dip at the moment and run that trade. But for now, it's all good. I think when we come back to the R1s and to test in around this trend, specifically for me, 59s is a price to look at for shorts here for further downside continuation. We're looking at 75 basis points in the next meeting. I think if we get hotter than expected CPIs and PCEs, which is of course the big Fed data point, you're really going to be looking at maybe they want to pull out the 1% gun in the November meeting. But let's see, let's see. Largely, Jerome, as always, for the last 2 years, he's just staying flexible. He's not gonna, put a flag out there and say exactly what he's going to do, and then the market just price in the whole bloody thing, and then he has no effect. So he's just remaining flexible, as they all are, and as they're going to need to be under these hot inflation tickets. But one other thing to look at here now is the dollar. Now I thought 75 basis points. We come in, get the confirmation, which we did. Short rally to the upside, sold back down, held support on VWAP into new highs on the dollar. Okay, we're nearly at this channel trend top here, but just what's come across the squawk this morning has been the BOJ is now interacting in the FX markets, and the government are stepping in to buy yen, selling dollars, and you're seeing the dollar getting crushed down now. So euro obviously going to avail of some of that weakness on the Dixie and get its head back above water here, right? So we were trading into that trend last night on the data. You can see to the tick pretty much. Lovely bid back up onto VWAP and then sold down overnight, back onto the trend and back up. So just if you weren't tuned in last night, I highly recommend checking it out. It's on the live playlist there. But here you go. There's this regression trend channel down on the euro. We have a similar up one on the Dixie, of course. And, I think we're holding on the channel. Can we get back to par here? 1005s? I think we can. Actually. I think because the dollar is just getting way crazy overinflated here. And I don't want to say hyperinflation, but, there have been sounds of that so far. And look, I think the Fed have a real problem if this thing starts topping out over 112s, 112.20s. I think they have a real problem on their hands. So, probably Jerome is pretty happy to see a bit of this coming out. He's coming out of it right now. Gold, a lot of people talking about gold on Twitter last night being the go-to. I think everyone knows what my feelings are on gold. It's like a toxic girlfriend relationship here. It's just, I don't know. Below 1680s, currently trading 1683s. retest on a broken trend on the 60-minute here. It's just pulled back. I don't see the gold trade personally speaking, but that doesn't mean that it doesn't mean anything if I see it or not. Yeah. But I'm not long in gold at the moment. At the moment, I think above probably 1690s, 17s. If we can reclaim the trend here about R1 and start to put in a baseline around 1687s, like a baseline, not a ceiling, then yeah. If we close, for example, the week on this doji, yeah, I mean, I'll buy gold. I'm going to open up one of those cash for gold shops. Definitely cash for gold. Let's buy it. Let's go. The bonds are getting crucified. Massive yield on the bonds at the moment. And I think gold is probably then going to start to lift up. But until we close the week on the doji, I'm not interested. Bitcoin up here, is it a risk off asset? Hell no, it's not. It's a risk asset. It's trailing equities. If you think anything else, I'm sorry, but I've got nothing else to say to you. But that's just a fact. The correlation is like 0.7, I think, 0.7 to 8 with equities markets at the moment, and the maths don't lie, right? So, pulling back on the Dow, 36.59s. I don't want to hazard a guess as to whether it's going to sell down from there or not, but I think we're just getting a nice little bit of upside relief at the moment on these markets. All right. Oil staying suspended on that weaker dollar right now on 82.65s. A breach on that will see us down to $80 for sure. So, all right, we're going to leave it there for today's pre-US rundown. If anyone hasn't clicked to subscribe, you got to hit the button. It's somewhere right there. Click it. You won't regret it. And you can check out the live stream from last night on the FOMC. All right. Have a good session, and I'll see you tomorrow morning. Bye-bye.